The number of active listings dropped, but so did the average sale price. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and I've got our weekly market statistics for the Portland metro area, both Oregon and Southwest Washington, all of the bedroom communities included. So first thing up is the number of active listings. It went down again. So we've been kind of seeing a bit of a yo-yo with this figure. Going back about 2 months is where we saw things change. Prior to that, the number of active listings had been increasing week after week after week, and then it started to level off and then dip and then increase and then dip and increase. But as of yet, we have not gone above that high water mark that we saw about 5-6 weeks ago. So you can see here in the chart 54.56 versus last week 55.01. And when we compare that number to last year at this time, the number of active listings increased. So we're comparing the number of active listings last year, 3667, to the 5456 we have this week. That is a 48.8% difference. That is, buyers have 48% more listings to choose from than they did during roughly the same time period last year. That number, for the first time in many weeks, has just dipped below the 50% mark, because as I mentioned, last year the number of active listings was also on the rise, and this week it actually went down. The number of new pending deals, so the our measure of buyer demand, is staying surprisingly resilient. At 668 versus last week's 691, we had a small decrease in the number of new pending deals. Looking back over the last about 3 months, we've kind of stayed in this 50 home or 50 transaction swing of 700. So, maybe it was some weeks it was a 50 above, maybe some weeks it was 50 below. We're kind of on the lower end of that swing, and the number has been creeping down, but I'm still surprised that it's staying this strong in the face of what we were seeing last week, which was interest rates. I mean, it was just a bloodbath last week. Interest rates getting close to 7%. Despite that, buyers are still out there writing contracts and getting homes under contract. So interesting number there, and we'll just keep an eye on that one. The number of new active listings was down versus the previous week, 619 versus 727. Last year at this time in my notes, I saw that number was 740. The difference again, I mentioned this a couple times, the difference again is this year, that 619 number, a lot of those properties, a lot of those new listings are old listings that have been canceled and relisted as if they're new, to get a new reset on get a new MLS number and a reset on the days on market. Last year at this time, there was much fewer of that because sellers and listing agents didn't have to do that to get their properties in front of buyers. Buyers were out there looking very aggressively. The number of closings this last week was 552. The previous week it was 573, so a decrease in the number of closings. Not a big number. We've been seeing larger numbers throughout the summer than that. But keep in mind that what we're closing right now are deals that went under contract at the end of August, which is typically a pretty slow time for our market. So not a huge surprise there. When we compare this number to the previous year, so roughly the same time period last year, that number in my notes was 772. So far fewer closings this year versus last year, but not too terrible this year. Looking at the number of price reductions that we saw, that number's been pretty consistent over the last 3 weeks, 823, 826, 832 this last week. Of those, 780 were still active and 52 were under contract. That's pretty consistent for what we've been seeing recently. Those properties with more significant price reductions, $15,000 or more, that number is 482, a little bit higher than we've been seeing in previous weeks. For the homes that did sell, the days on market is up for both the median and the average days on market. They both went up one. The average is 31. Last year at this time it was 18. The median is 16. Last year at this time the median was 7. So property's definitely taking longer to sell this year versus last year. But when we compare that number to the last 15 years, average days on market, median days on market, these are actually pretty good numbers compared to the last 15 years. The average sale price keeps coming down. You can see here in this chart that it's on a pretty steady decline since the spring. So we're at 587,293 versus the previous week where we're at 598,592. This is when we compare this to roughly the same time period last year. The average sale price was 562,096. It was also declining last year at this time. So that gives us a difference in the average sale price of an increase of 4.5%. So on average, homes sold for 4.5% more than they did last week, roughly the same time period last year. The previous week, that number was 5.2. So we can see that gap between last year and this year is decreasing. So we're starting to get closer and closer as we go through the balance of the year, which was something that we're expecting, as far back as last spring when we saw this trend coming. The median was a bit of a surprise, though. The median is supposed to be more of our steady number. It's supposed to get rid of the outliers, the extremely high price properties that maybe drag the price up, or some really low price properties that drag the price down. The median is supposed to get rid of that and kind of show us a more steady, consistent number where we are. The number was 540,000 this year versus 500,000 last year. That's an 8% increase in the median sale price this year versus last year. The previous week that was 6.4. So interesting that it went up when the average went down. So we'll just keep an eye on that. That average number, we're dealing with a smaller sample, so it can tend to be a little more volatile. The average sale price versus the original asking price came in at 96.89. That number has been keeping true. It bumped up 1 week, but probably out of the last 5 or 6 weeks, it's been on its way down, just very slowly, incrementally decreasing. Last week, that number was 97.13. This week, 96.89. Last year at this time, that number was 100.03. So what does this mean for our market? I'm surprised at how resilient our market is proving in the face of these incredibly high interest rates compared to where we were at the beginning of the year. In some cases, we're looking at interest rates that are 4.4 percentage points higher than where we were at the beginning of the year. Somewhere under 3%. Now we're pushing 7%. And I would have expected buyer demand to really wash away at this point. I think the things that are helping us right now are some creative, clever loan products like that. We've talked about that in the past, the 2-1 buy down, which effectively reduces the 2-1 rate buy down, which effectively can reduce a buyer's interest rate by 2 percentage points the first year of the life of the loan, and by 1 percentage point the second year of the life of the loan, and then year number 3, it goes back to whatever interest rate they locked in at that time. That's an interesting product because we live in our house payments. The interest rate is one thing, but how we feel about the house payment, the monthly payment is often more important. We live inside that payment. So it gives buyers a bit of comfort for a couple of years, and gives also provides the opportunity for a refi if rates go down in the next couple of years. The other thing that I'm seeing a lot of are 5-year adjustable rate mortgages. And that can get you as much as like a 1 1/4 off the interest rate. I saw one on one of the listings in our office that came through a pre-approval where rates were close to 7 and the buyers had an interest rate of 5.75. So I suspect what they're doing is a 5-year ARM, adjustable rate mortgage, which means that the rate will be locked in for 5 years, and then after that the rate will reset typically every 6 months or 1 month based on what the interest rates are at that time. So another interesting product that can help folks feel a little less pain with their mortgage payment, and I think a lot of those folks are betting on the idea that within the next 5 years the mortgage rates will change, and within that time period they'll have a chance to refinance out of that rate into a lower rate, definitely if the rates go down. So there are some ways to work your way around the pain of the higher interest rates and the payments, the subsequent payments. The other thing that I think is really helping push buyer demand in our market is what's going on the rental market. The rental market is still a pretty tough market for tenants, and it seems to be particularly a tough market for people who are looking to rent a single-family home. And we're hearing stories about folks putting their single-family homes on the rental market and getting as many as 40-some applications within the first 24 hours. So I think some tenants slash buyers are out there looking at this going, gosh, it's really tough on the rental market, and I may have to pay a bit more per month, but I can get into a property now. I don't have to compete. I don't have to pay over the asking price, and inspections and appraisal contingencies are now back on the table, and I can negotiate all that stuff. And if I can get one of these cool loan products, or maybe I can get the seller to purchase one of these 2-1 buy downs, I can greatly reduce what my payment's going to be over the next year or two, and hopefully during that interim I can refinance. So I suspect there's a lot of folks that are doing that, looking at the rents that they're going to be paying and saying, I don't want to be throwing away $35,000 a year on rent when I can get into a house, freeze my level cost of shelter payment at a certain level, and then maybe refinance my way into a better situation down the line. So that's what we have for you this week. As always, I love your comments. So if you have any questions or curious about what's going on in a specific area, please post them below. And then give me a thumbs up. I always like that. And feel free to subscribe to the channel and share the video with someone you might someone you think might find it interesting. All right, we'll see you next week.